Let's unpack this. When you think about the global economy, this huge web of trade and investment, at its heart, really, sits the main currency everyone uses. It's sort of this invisible force shaping everything from borrowing costs to, well, even geopolitics. So today we're doing a deep dive using this stack of sources. You've given us articles, notes, research to dig into a question that feels increasingly relevant right now. Is the U.S. dollar's position, its long reign as the top global reserve currency, maybe facing a real challenge from the euro?
Yeah, that's exactly it. And these sources, they give us a lot of different angles on this. It's complex, but really important. Our mission here, I think, is to get past the headlines, really unpack the arguments in the material, try to understand what's motivating key people, European officials, and then weigh that against what market watchers are saying, because they don't all agree, not based on these sources anyway, and figure out, okay, what does this all actually mean for the bigger picture? Especially, like you said, in this global environment that the sources describe as pretty uncertain. Geopolitics shifting, economic question marks.
It definitely feels like a moment where things we took for granted that seemed, it's set in stone about how global finance works. Maybe they're starting to shift, or at least people are talking openly about the possibility of shifts.
Exactly. That potential for change is right there in the material you shared. It really brings that conversation into focus.
Okay, so if we're talking about a challenge, we first need to be super clear on the status quo. What exactly is a reserve currency? And why is the U.S. dollar the king of the hill right now, according to these sources?
Right, let's start with the basics. A reserve currency, as the sources sort of lay out, is essentially a foreign currency that central banks, the big monetary authorities around the world, hold a lot of. It's part of their foreign exchange reserves. Think of it like the main currency everyone trusts for international deals, for investments, and just as a safe place to hold value. They need something liquid, widely accepted, and relatively stable.
So it's not just money locked away somewhere, it's actively used.
Oh, absolutely. It's much more than just reserves. A top reserve currency is usually the one used most in global trade. When a company in Germany buys something from a company in Brazil, chances are they're invoicing and settling that deal in the dominant currency. It just makes things smoother, less hassle with conversions.
Right, streamlining trade. That's a massive advantage. What else makes it dominant?
Well, it's also huge in international investment. If someone in Japan wants to buy U.S. bonds, or maybe a European company wants to build a factory in Asia, they often use the main reserve currency for those transactions too. Stocks, bonds, direct investment, it flows through that currency because it's easy to use and everyone accepts it. It basically lubricates global capital.
Okay, so it greases the wheels for both trade and investment. And central banks hold it. Well, why? Again, just as a backup fund.
Partly that, yeah, a rainy day fund, but also for managing their own currency's value. They might intervene in markets using those reserves, and it's seen as a safe store of value, safer perhaps than their own currency or other assets sometimes. So from a central bank's point of view, it's fundamental for stability.
Got it. It's the trusted currency for trade, investment, and national financial safety nets, globally speaking. And based on the material we've got, the U.S. dollar is, well, absolutely crushing it right now. What do the numbers in the sources actually say about its dominance?
The sources are really clear here. They give specific figures. The dollar accounts for almost 60% of all global foreign exchange reserves held by central banks. That number alone is kind of staggering. Over half the money governments worldwide set aside in foreign currency is in U.S. dollars.
60%. Wow. That just shows how deeply embedded it is, the level of trust, really, from global authorities.
It really does. And the sources also point out its vital role in trading key stuff globally, like oil or gold. Overwhelmingly, those big commodities are priced and traded in dollars. That constant demand for dollars just reinforces its central place.
Right, the whole petrodollar idea and gold markets, too. Those are major anchors holding up its status.
Exactly. And the material adds another piece. How other countries actually peg their own currencies to the dollar. They essentially tie their currency's value to the dollar as a stable reference point. The sources give examples like the Hong Kong dollar, the Saudi rial, major currencies directly linked to the USD. It shows just how fundamental the dollar is to monetary policy elsewhere.
So undisputed heavyweight champ, nearly 60% of reserves, underpinning key commodity trades, acting as an anchor for other currencies. That sounds, as one source puts it later, pretty formidable. Now, where does the euro stand in all this, based on the same sources?
The sources are just as clear about the euro. It's described as a distant second. The numbers show the euro makes up around 20% of international FX reserves.
20%. Okay,
Yeah.
so compare that to nearly 60. That's a 40-point gap.
Yeah.
Yeah, distant second sounds about right based purely on those figures.
It is. And it really highlights the scale of the mountain the euro would have to climb if it were to seriously boost its international role, let alone challenge the dollar. The current picture, just looking at reserves, is one of overwhelming dollar strength.
Okay, baseline established. Dollar way out front, euro lagging significantly behind. But the sources hint that things might not be totally static. There are maybe some signs of movement, and crucially, a very clear ambition coming from Europe to try and leverage this moment. What are these signs? And what's this European ambition about, according to the material?
Yeah, the material flags some recent market action as, well, potentially indicating some shifting ground. It mentions the US dollar index, the one that tracks the dollar against other major currencies, had actually fallen by over 8% since the start of that year when the source was written.
An 8% drop in just a few months for the world's main currency. That's pretty noticeable. Suggests maybe some weakening, or at least loss of momentum.
It definitely got the attention of the market watchers cited in the sources. And the other side of that coin was the euro's performance. The sources say the euro actually saw significant gains against the dollar in that same period, rising more than 9%.
Okay, so even though the overall gap is huge, the trend in that snapshot was the euro gaining on the dollar.
That's what the data presented suggests, yeah. And the sources link these moves at least partly to this backdrop of uncertainty. Specifically, they highlight uncertainty around President Trump's tariff policies as one factor causing volatility in U.S. assets.
The trade disputes, yeah. That's been a huge theme globally.
Exactly. And the sources report this neutrally, just saying this uncertainty was seen as contributing to some wavering confidence in the U.S. dollar. The idea being, unpredictable policy creates risk, and investors looking for safety might start looking elsewhere, maybe towards the Eurozone.
And it's precisely this environment wavering dollar confidence, market shifts that European officials seem to see as an opening. The source says they're making no secret of wanting the euro to grab this chance.
That ambition really comes through strongly in the material, and it's articulated very clearly by top officials at the European Central Bank, the ECB.
Starting with Christine Lagarde, the ECB president, what did the sources say she specifically stated?
Her comments from a speech she gave in Berlin were quite direct. The sources quote her saying that the shifting geopolitical landscape is, in fact, creating opportunities for the euro. She described this new landscape by saying, and I'm paraphrasing slightly from the quote, that multilateral cooperation is being replaced by zero-sum thinking and bilateral power plays.
That's a pretty stark assessment of the global mood, right? Moving away from working together towards more sort of nation-first competition.
It is. And she directly tied this political shift to the money system. She's quoted saying, "There is even uncertainty about the cornerstone of the system, the dominant role of the U.S. dollar." I mean, that's a very high-level official, openly questioning the stability of the dollar's top spot.
And from that uncertainty, she specifically sees a chance for the euro to step into the gap.
Yes, the sources quote her saying this landscape could open the door for the euro to play a greater international role. So she's not just observing the uncertainty, she's actively positioning it as a potential catalyst for the euro to gain ground.
Sounds very deliberate, very strategic. And she wasn't alone in this, right? The sources also mentioned Isabel Schnabel, another ECB board member.
That's right. The material mentions comments Schnabel made just the week before the main article. And like Lagarde, she connected it to U.S. policy, suggesting the euro area could actually become a kind of safe haven as Trump's tariff policies started to bite.
A safe haven. That's the term investors use for places they run to when things get turbulent elsewhere, right?
Exactly. It implies perceived safety, stability. And according to the source, Schnabel saw this potential safe haven status as representing a historical opportunity to foster the international role of the euro. So you have both Lagarde and Schnabel, according to this material, not just noticing the shifts, but framing it as a specific, maybe even unique, window for the euro to expand its global influence, linking it directly to geopolitics and specific U.S. policies mentioned.
Okay, the ambition is definitely clear, and they perceive an opportunity driven by these external factors, U.S. policy uncertainty, geopolitical shifts. But let's be real, that 40-point gap in reserves is massive. How does Lagarde suggest Europe actually goes about trying to close that gap? How does the euro earn, as she put it, greater global influence?
Right, and that's where Lagarde laid out a kind of roadmap. She did acknowledge it was far from guaranteed, so she's managing expectations too. But she outlined three specific conditions, or pillars, she writes Europe needs to build for the euro to gain more international clout.
Earn it, yeah. Suggests it won't happen automatically. So what are these conditions Europe needs to meet?
Okay, pillar number one. Establish a solid and credible geopolitical foundation. What does that mean? According to her, it means Europe sticking firmly to open trade, kind of positioning itself against protectionism.
So projecting stability and reliability as a trading partner. That makes sense.
Yes, and she added that this needs to be backed up by security capabilities. This implies that being a serious player on the world stage, contributing to security, defending its interests, that's also part of building currency trust. It's not just about the economy, it's about geopolitical weight.
Interesting. That links the financial goal directly to Europe's role in defense and foreign policy. What was the second condition?
Second pillar was about reinforcing the economic foundation. The goal here, she said, is making Europe a top destination for global capital. And the key enabler for that, she specified deeper and more liquid capital markets.
Okay, let's pause there. Deeper and more liquid capital markets. What does that actually mean, and why is it so crucial for a reserve currency?
Basically, it means you have a wide range of things for investors to buy and sell stocks, bonds, different kinds of derivatives, and, crucially, that the markets can handle really big trades without prices going haywire. Liquidity means you can buy or sell quickly, easily, without your own trade massively moving the price against you. If you're a huge global pension fund wanting to invest billions in euro bonds, you need to know you can get in and out smoothly. If the market's shallow or illiquid, it's risky and less attractive for big money.
So if Europe wants global investors to choose euro assets instead of dollar assets, its financial markets need to be just as easy, just as efficient to use, especially for the big players. It's about scale and functionality.
Exactly. Making the Eurozone's financial system truly competitive, maybe even better than the U.S. system from a practical trading and investment viewpoint.
Makes sense. And the third condition?
Third pillar, bolstering the legal foundation. Here, Lagarde stressed defending the rule of law that gives investors security and predictability. And, critically, she talked about the need for Europe to unite politically. This political unity, she argued, is vital so that we can resist external pressures.
Unite politically.
Yeah.
That seems like a really big one given the EU structure with all the different member states. And resist external pressures definitely sounds like it connects back to that idea of strategic autonomy we touched on.
It absolutely does. It suggests that internal cohesion, politically, is seen as necessary to project strength outwards, whether that's in trade talks, foreign policy, or standing up to financial pressure, or even sanctions from other major powers. So her roadmap is pretty comprehensive: a strong geopolitical stance, deep and accessible financial markets, solid rule of law, and crucially, political unity among the member countries.
That's quite a checklist. So
Well,
that's the how, build these foundations. But why the big push? What are the specific benefits Lagarde sees for Europe if the euro did achieve this greater international status?
Well, she listed what the sources called a plethora of benefits, basically, a whole lot of good things for Europe.
A plethora. Okay. Sounds highly attractive. What kind of benefits are we talking about?
A major one she mentioned is lower borrowing costs for governments in the region. If the euro is more widely held and trusted globally, there's more demand for euro-denominated debt, like government bonds. That higher demand makes it cheaper for Eurozone countries to borrow money, which means less spending on interest payments.
That's a huge direct financial plus for the national budgets within the Eurozone. What else?
She also talked about insulation from exchange rate volatility. If more global trade and finance happens in euros, European businesses and the economy overall are less exposed to big swings between the euro and the dollar or other currencies. It reduces risk, makes planning easier for businesses engaged internationally.
Less vulnerability to currency fluctuations. Makes sense.
And then maybe the most politically charged benefit she mentioned, especially given the context of shifting geopolitics: protections for Europe from sanctions or other coercive measures.
Whoa. Okay, that directly echoes her point about resisting external pressures. It really sounds like a desire for financial independence, maybe to avoid being as vulnerable to economic pressure from others. Perhaps implicitly contrasting with how the dollar's dominance gives the U.S. a lot of clout. when it imposes sanctions.
It certainly points towards a strategic goal beyond just pure economics. It's about reducing vulnerability. And she kind of summed it all up by saying the ultimate prize is that a bigger international role for the euro would let Europe better control its own destiny.
Better control its own destiny. Yeah. Wow. That phrase really drives it home, doesn't it? This isn't just some technical finance debate about currency shares. It's fundamentally about economic sovereignty, about geopolitical power and influence. So, okay, the ambition is clear. The challenges are known but framed as things to work on. The potential upsides, financial savings, stability, strategic autonomy are really significant. But are the market watchers, the people actually trading these currencies day in, day out, are they buying this story? Are they convinced the euro is really set to challenge the dollar?
Well, according to the sources you gave us, when CNBC talked to market watchers about this, they were distinctly divided. It's not like everyone agrees. There's real disagreement based on how they read the situation and the future prospects.
Okay, divided. Let's hear the optimistic case first then. Who sees the euro gaining ground, maybe taking some share from the dollar?
George Buckley, who's the chief European economist over at Nomura, is presented as being on the more optimistic side. He apparently agreed with Lagarde's assessment, though the source says, to some extent.
To some extent. Okay, so he sees merit in it, but maybe with some caveats or not quite as strongly. What was his reasoning?
His logic, as laid out in the source, is that he could see more upside for the euro because investors might be looking to diversify away from the dollar, the greenback.
Right. So if that uncertainty around U.S. policy, or maybe just general risk diversification, makes investors nervous about having all their eggs in the dollar basket, they need alternatives. And Buckley thinks the euro is the obvious place to go.
That's exactly his point. He's quoted directly saying, if they're thinking of switching out of the dollar, the euro is an obvious choice. And his reason why, he says, it's a huge trading bloc.
Yeah, it goes right back to Lagarde's economic foundation point. The sheer size and depth of the Eurozone economy make it one of the few places that can absorb large amounts of global capital if it moves away from the dollar.
Precisely. It offers that scale and liquidity big investors need. And Buckley explicitly linked the euro's recent stronger performance to those external factors, saying he believed it was benefiting from the things going on in the U.S., which seems to point back to that tariff uncertainty and volatility context.
Did he put any numbers on this optimism, any specific forecasts for the euro?
He did, yeah. The source mentions he predicted the euro could climb to around $1.20 by the end of that year.
Okay, let's put that in context again. The source mentioned the euro was trading around $1.13 a tilt at the time.
Right. So going from like $1.13 to $1.20, that would be another jump of roughly 6% from where it was then. Now, that's not closing the huge reserve gap overnight, obviously, but it does signal a pretty significant expected appreciation against the dollar based on his view.
And his overall take.
His summary view, as presented, was that, yeah, the euro is still way behind in reserve status, but it's gaining in momentum quite significantly. He sees the current conditions as favorable for it to keep chipping away, essentially.
Okay, so that's the bullish case. Opportunity knocks due to external factors. The euro's fundamental economic size makes it a viable alternative, and momentum is building. Now, what about the other side? Who's pouring cold water on this idea of the euro challenging the dollar?
The source brings in Aaron Hill, chief market analyst at FP Markets, to represent the skeptical perspective. And his core view is quoted as, the dollar's dominance remains formidable.
Formidable, that's a strong word. Suggests it's deeply rooted, hard to dislodge. Why is he so skeptical? What are his reasons?
Well, he does acknowledge the euro has the backing of the EU's substantial economic weight. So he agrees with Buckley on the sheer size aspect. But, he argues, the euro faces significant hurdles that really cap its potential to mount a serious challenge to the dollar.
Hurdles. And these sound like they might be internal European hurdles, contrasting with the external opportunities Lagarde and Buckley focused on. What specific hurdles does Hill point to?
He mentions two key things: political fragmentation across the different member states and Europe's reliance on U.S. security frameworks. He sees these as limiting the euro's global influence.
Ah, okay. So the very things Lagarde said Europe needs to fix: political unity and security capabilities. Hill sees them as major existing weaknesses that are actively holding the euro back right now.
That's exactly it. He argues these issues mean the euro just doesn't have the necessary cohesion and reach to really compete with the dollar on the world stage, not in the same way. He's quoted saying it lacks the cohesion and reach to challenge the dollar's supremacy in the near term.
So for Hill, it's not just about having a big economy. The political setup, the strategic dependencies of the eurozone itself, Those are fundamental roadblocks preventing the euro from becoming a truly top-tier global currency.
That seems to be the crux of his argument. He does concede that things like rising U.S. debt or shifting global alliances are worth watching. He says they warrant scrutiny, so he's not totally ignoring potential dollar vulnerabilities. But his bottom line is that the euro's own internal limitations aren't likely to vanish anytime soon. And because of that, his conclusion is that the greenback's reign endures, unshaken.
Endures, unshaken. That's a really stark phrase. Captures his view perfectly. Despite some noise or concerns about the dollar, its fundamental dominance isn't really threatened by the euro, at least not yet, because the euro has its own deep-seated problems to deal with.
And that skepticism gets reinforced by another voice in the source material, John Plassard, a senior investment specialist at Mirabaud Group. His take, from comments made earlier that week, was apparently even more direct.
Oh, what did he say?
Looking at that nearly 60% share the dollar holds in global reserves, he basically just said, there is no competition for the U.S. dollar right now, period.
No competition. Well, that's pretty dismissive.
Yeah.
It suggests the gap isn't just large, it's like insurmountable in the current reality. It's not even a contest right now, in his view.
Yeah, so if you put Helen Plassard's views together, they really represent that side of the argument. The dollar's dominance is structurally sound because of its scale and, just as importantly, because of the perceived structural weaknesses within the Eurozone itself. External opportunities or market fluctuations don't change that fundamental picture for them. That's the skeptical camp presented in the material.
So we're left with this really interesting tension laid out in the sources. On one hand, you have this clear ambition, this stated opportunity seen by European officials like Lagarde and Schnabel. And that's echoed by some market watchers like Buckley, who see real momentum, real potential for the euro to gain. But then you have this sharp contrast from skeptics like Hill and Plassard, who point to these deep internal structural challenges for the euro area and basically see the dollar's position as secure, formidable, unshaken, at least for the foreseeable future.
That division really is the core takeaway here. Based only on the material we've looked at, the question of whether the euro can genuinely challenge, let alone, topple the dollar, it's clearly still very much an open debate among people who follow this closely. There's certainly no consensus presented in these sources.
Right. And, this can all sound very high level. Geopolitics, reserve currencies. Why should someone listening to this, why should you care about whether the euro gains ground on the dollar? What difference does it actually make in the real world?
That's a really important question to ask because, yeah, the details might seem abstract, kind of technical finance stuff. But which currency is the world's main reserve and trading currency? That has huge real-world impacts. Think back to those benefits Lagarde listed, that Europe wants cheaper borrowing, less volatility exposure, protection from sanctions, controlling its destiny.
Yeah, and if Europe gains those benefits, it implies consequences elsewhere, right? For the U.S. as the current holder of that status and just for the whole global system.
Absolutely. A shift in reserve currency status, even if it's gradual, it really does shift the global balance of economic power. It can affect global economic stability. Imagine if there was a sudden, messy shift away from the dollar. That could cause chaos. It definitely impacts the financial strength and independence of big players like the EU. A stronger euro reserve role makes the EU financially tougher, less vulnerable maybe.
So it's about who holds the financial levers globally, who's more independent, whose policies ripple out the furthest.
Exactly that. And maybe more tangibly for you, the listener, these big shifts can eventually filter down. It's not going to happen overnight, but remember that exchange rate example. Buckley predicting the euro might go from $1.13 to $1.20. Those kinds of moves, driven by these larger forces, affect currency values, and exchange rates impact, the cost of your vacation abroad, the price of goods imported from other countries, how competitive exports are. Over the long haul, a major shift in the world's main currency could influence global trade flows, maybe even subtly change the cost of living or doing business more broadly because the basic plumbing of international finance is changing underneath.
It really connects the dots, doesn't it, between the big geopolitical moves, the financial system architecture, and potentially our everyday economic lives down the road. And Lagarde framing it as controlling Europe's destiny. That just hammers home that this is fundamentally about power and influence on the world stage.
Yeah, it lifts it right out of just being about finance and puts it squarely in the realm of strategy and politics, too.
Well, this has been a really fascinating deep dive. It covers so much ground: finance, economics, politics, all wrapped up in this question about currency dominance.
It definitely shows how tightly linked all those things really are.
And it leaves us right back where the sources position the debate. this clear European ambition, fueled by what they see as external opportunities, clashing with these pretty significant internal structural challenges that the skeptics keep highlighting. The outcome, still very much up in the air based on this material.
Absolutely. And if you think about Lagarde's own conditions for the euro to earn its way up, especially that need for deeper political unity, for better security capabilities, you have to weigh that against the counter-arguments from people like Hill, who see that exact political fragmentation and security reliance as the biggest roadblocks.
It really makes you wonder, doesn't it? Are those internal European hurdles, the political divisions, the security setup, are they truly insurmountable in the long run? Does it matter what's happening externally? Or could this historical opportunity that Schnabel mentioned, driven by shifting geopolitics, by U.S. policy uncertainty like those tariffs, could that provide enough of a jolt to actually force Europe to overcome those internal challenges, to push through the needed reforms and find that unity Lagarde says is crucial?
It's such a dynamic situation to watch. What developments do you, the listener, we'd need to see next, based on everything we've discussed from these sources, for the picture to become clearer? Would it be major EU reforms, a big shift in U.S. policy direction, something else entirely?
That really is the multi-trillion dollar, or maybe multi-trillion euro question, isn't it?
Yes.
So much depends on how those internal European dynamics interact with these larger global forces. This has been incredibly insightful. Thanks so much for providing the sources that let us explore all these different angles.